Tesla's recently had its earnings call for the fourth quarter of 2022, and aside from the company's impressive figures, Tesla's CEO, Elon Musk, also gave updates on several projects slated for 2023. However, even with the many issues disclosed at the earnings call, there could still be some missing updates on Tesla's plans for the year, especially in terms of building more gigafactories, an important requirement if the automakers to reach large production volumes this year. Hey guys, welcome back to Tesla Tomorrow. Tesla's recently disclosed earnings for the fourth quarter of 2022. The automaker reported fourth quarter adjusted earnings per share of 1.19, which beat street estimates of 1.13 cents. The company also reported solar deployment of 100 MW in the fourth quarter, up 18 year-over-year, with energy storage totaling 462 MWh in the fourth quarter, up by 152 year-over-year. Tesla's recent vehicle productions totaled 439,701, and these units were recorded in the fourth quarter, and deliveries amounted to 405,278 electric vehicles. These figures were up 44 and 31 year-over-year, respectively. The automaker also gave updates on critical catalysts for the year. According to Tesla, it's well on track to begin production of the highly anticipated Cybertruck later this year. It is a gigafactory in Texas. It also discussed that its next-generation vehicle platform is under development, and more details will be shared in its upcoming Investor Day. Behold, on the 1st of March, Tesla said it remained committed to target production goal 50 annual growth and expects to remain ahead of the 50 figure in 2023 with 1.8 million vehicles. Speaking about the progress into 2023, Tesla said that it knows that there are questions about the near-term impact of an uncertain macroeconomic environment, in particular with regards to rising interest rates. The automaker added that it is this team that is used to challenges given the culture required to get the company to where it is today. However, it is noteworthy that while there were several plans for Tesla disclosed in the recent earnings, there was no particular update on the company's plans to build more gigafactories. Is this something Tesla investors should be worried about? More to come in this video, but before we get into it, if you'd like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla has been announcing its intention to build new gigafactories and other geographic areas of the world for quite some time. Among its most talked about sites are places like Canada, second place in China, and even Middle East settings. However, the automaker gave no update at this recent earnings call that it just had in August 2022. Elon Musk said Tesla's annual meeting of stockholders that Tesla to announce a new gigafactory location before the end of the year as the company's production was being ramped up to meet huge global demand. But not only did this not happen, but there's also been no guarantee that it's actually going to happen this year. Either also Tesla and the northeastern Mexican state of Nuevo Leon have actually yet to reach a deal on building an electric vehicle assembly plant in the area, according to Emmanuel Liu, the Deputy Secretary of Economic Development at Nuevo Leon. The state is yet to reach an agreement with Tesla. He also added that he does not know whether a decision will be made this year. However, latest reports are indicating Tesla's new gigafactory will likely be built in Mexico, more specifically in a new industrial park called T-Max Park. According to Jesus Ramirez, spokesperson for the presidency of Mexico, Tesla is considering investing in this area to be able to take advantage of the potential IFA at its airport in Santa Lucia. This environment will be of key importance for Tesla since its shipments and distributions could be done by hand, something not so common in the EV sector. In similar news, Tesla's recent price cut is already crashing demand for its competitors globally. In the week following Tesla's price cut in China, the automaker's sales shot up 76 to 12,654. According to data from the China Merchants Bank, Tesla used the same price code strategy in the United States in January to start the year off at a rapid pace. While January sales figures in China are usually lighter than December reports, suggest that analysis is more convinced that Tesla's price drops in the market are contributing to the EV sales slumps in the country. An independent analysis at Shanghai, China recently disclosed that Tesla's huge discounts on his Model 3 and Y vehicles siphoned off drivers buying interest in the Chinese-developed smart EVs. Tesla's price cuts in China dropped sales of competing domestic electric vehicle maker NIO, Li Auto, and Xpeng bought as many as 60 vehicles in January. These three companies' results showed significant price drops in both monthly and year-over-year sales comparisons in January after Tesla stoked demand by dropping prices by as much as 13.5% on vehicles in China. NIO delivered 8506 vehicles in January, a 146.2% drop from December 2022, and an 11.9% decrease from January 2022. Li Auto's 15,141 units delivered last month were a 28.7% decrease from the month before and a 23.4% drop from January 2022. Xpeng felt the most drastic decrease, with a 53.8% sales decrease compared to December, but a massive 59.6% drop from last January. It is usually expected that when a leading company cuts prices, all their rivals feel pressure to follow suit, and this is gradually playing out in Tesla's case. Ford recently announced that it was cutting prices on this Mustang Mach-E, an electric SUV, to compete against the Model Y, with price drops as high as $900 to $5,900 depending on vehicle auctions. This was clearly a response to Tesla, as Marin Gaha, the chief customer officer of Ford's electric vehicle business, confirmed that the company was responding to changes in the marketplace. But the question is, can other EV makers match Tesla's price control? The advantage is probably not Tesla is becoming the overwhelming market leader in the EV sector, with a more significant market advantage that allows it to cut prices while making massive revenue from its cars. The automaker makes healthy profits on their TBs, while some big automakers are still producing their cars at a loss or struggling to make them up in volume. And this gets even better because Tesla may still cut car prices again this year, according to industry officials who work with Tesla and also its suppliers. Tesla's suppliers are bracing for pressure from Musk and his team to cut their prices further, and the electric car leader has aggressively slashed vehicle prices in a slowing economy. This concern comes after Tesla's chief financial officers at Kirkhan said that the company was attacking every other area of cost, including the car supply chain, and would work closely with suppliers. Also, during Tesla's earnings conference call last week, Musk said a recession could lead to meaningful decreases in almost all of its input costs. Tesla plans to produce an average of 20,000 vehicles at its Shanghai factory in February and March, and this would bring production roughly back to the level of September 2022, when the factory turns out its 2018 Model 3 and Y's. Tesla's plan comes after the manufacturer cut production by about a third of November and extended the Lunar New Year holiday for its workers in January in order to deal with increased inventory. Cuts are a huge advantage for the automaker, as the CEO, Elon Musk, recently disclosed that the number of orders was roughly double that of production numbers in January in China alone. Daily retail sales were roughly 36% higher than the corresponding period of last year. Tesla delivered a good 1.3 million cars in 2022, and according to Musk, deliveries could reach 2 million this year. Likewise, in recent news, it was disclosed that Tesla had opened up a handful of charging stations in Australia for electric vehicles made by other car manufacturers. The EV and energy company made an announcement in early February stating that all electric cars could be charged at 5 of their stations throughout New South Wales. The selected superchargers are in Narooma, Jerry's Plains, Tamworth, West Dubbo, and Bathurst. Although this could be a huge thing for Tesla, it's actually going to cost more. The company plans to charge a non-Tesla vehicle at a Tesla station for around 70 cents per kilowatt hour, while it ordinarily costs between 58 and 70 cents per kilowatt hour to charge Tesla cars in the same supercharger. However, if non-Tesla owners purchase a charging membership, which is $10 a month, that fee goes down to 66 cents per kilowatt hour. Tesla has been pushing to expand their non-Tesla supercharger pilot into new locations, and the company's been providing superchargers for non-Tesla EVs since late 2022, starting the program in several European countries. It's also added new superchargers for non-Tesla vehicles to the UK and Australia. Tesla's latest news on superchargers in Australia comes after it was announced that the Tesla Model 3 was crowned Australia's most popular mid-sized sit-in for 2022. The electric car toppled the Toyota Camry in sales. Tesla sold 10,877 Model 3s last year, compared to 9,1538 sales of the Tesla Camry. The company's total sales of 19,584 vehicles amounted to nearly two-thirds of all electric cars sold across the country in total. 33,410 new fully battery electric vehicles were sold in Australia in 2022, amounting to 3.1% of new car sales. Tesla's allowance of non-Tesla users to use its superchargers means that owners of other EVs are likely to ensure that they got access to CCS fast charging sockets. Also, Tesla stations use short cables suited to the charging port that is located on the rear left of Tesla's. So if the non-Tesla vehicle has its port on the right, it'll have to park in a different bay and use the charging cable in the bay next to it. Tesla is continuously scaling up its revenue sources, and this will have a high impact on its stock price in no time. Experts say that state and federal tax rebates are helping Tesla's sales surge as politicians aim to phase out fossil fuel vehicles to tackle climate change. Federated Chamber of Automotive Industries Chief Executive Tony Weber expects that electric vehicle uptake will remain strong in 2023. According to him, the year is shaping up to be one of the most significant in recent history, particularly in terms of the development of policies that set the direction for the future decarbonization of light vehicles. Fleet, what do you think about Tesla? Are they going to be building any new gigafactories this year? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.